Rohitni? Hello and welcome. You're watching Last Take. I'm Shweta Kothari, with me Suyash Maheshwari. Suyash, hi. Very good afternoon. Bulls having a great day in the markets for the past 2 consecutive sessions, at least actually 3 consecutive sessions, come to think of it. And a gap up opening day after day. The exuberance is unabated.
Absolutely right, Shweta. After a fabulous Monday, most of us were expecting a tepid Tuesday, but that was not the case at all. And, if we look at the entire scheme of things, the rally, we have continuously moved into uncharted territory in the last few sessions. Like Nifty is on a 3-day run of scaling new lifetime high. Sensex, on the other hand, is on a 2-day run of scaling new lifetimes high. And, let's look at the markets first. Now, we opened gap up, as you pointed out, and we did not give up, much of those morning gains. We just slipped by about 90 points or so on Nifty, and we rather built onto the gains and were able to end, about 9 points shy of the day's high, above the 20,850 mark. Sensex, on the other hand, touched 69,000 for the very first time. The index rallied by over 400 points, and mid cap and the small cap index, Shweta, they are showing signs of exhaustion. The both indices, mid cap and the small cap, saw big intraday dips, but bulls were able to, buy back all those dips. But perhaps we need to be cautious over there. Some signs of exhaustion are showing up. India VIX, now that is a problem. It has spiked by about 3.5%. And it's now above 13.4 mark. We have not seen these sort of levels since May of this year. But, let's get back to the tremendous rally. Nifty is now on a 600, in the last 2 sessions has added about 600 points. We have not seen these kinds of return in 2023 as of right now. And the bigger winner and, what's driving the markets higher is Nifty Bank. That index has, added about 2100 points in just 2 sessions. We have been talking about how Nifty banking pack as a whole was underperforming, and that was a big drag on the markets because, as we know, it constitutes about the weight of Nifty Bank and the banking and the financial stocks as about 35 to 40% in the Nifty space. So that is now participating, and we are seeing good movement in banking stocks, both PSU and private banks. And Nifty Bank also scaled a new lifetime high today, and it has scaled 47,000 for the very first time. And I think, looking back at the 2 or 3 day rally that we have seen, general elections overall was a big overhang for the market. The market was expecting election spending to pick up, fiscal populism to perhaps show up in the next few months. With BJP's thumping victory in, the 3 states, the so-called Hindi-speaking heartland of India, that has, those concerns have somewhat been put to rest. Now, that's the domestic factor, but if you look at the global factors, there is a sharp decline in US 10-year treasury yields. They have declined by over 80 basis points in a matter of 6 weeks. The dollar index has also corrected sharply from 108 sort of levels to around 103 now, so that is at a 3-month low. Crude oil prices have declined by about 20%, and they are currently hovering around that $78 a barrel mark. So all of this has created a risk on sentiment for global equities, and as a result we are seeing a broad-based rally across all major economies. And as a matter of fact, India in the last 1 month has outperformed all major global economies.
Outperforming the pack.
Nifty is up somewhere around 7%, whereas Dow and S&P 500, they are up somewhere around 5 to 7%. Stocks 600, the pan-European index, is up about 7% or so. Shanghai Composite, China's index, is down by about 3%, and Nikkei has added by about 0.21% in the last 1 month.
All right, last 1 month, Nifty continues to be the outperformer. Rohit Srivastava, founder and market strategist, India Chart, on the show with us. Rohit, good afternoon. Thank you for taking time out. Nifty continues to be the outperformer, not just over the month, but today and yesterday. The momentum is continuing. Is it still the...
To some extent, we can also say that the markets started to anticipate this a while back, because we were really stuck at that 19,850 level, and the moment we got past that, it's starting to look like it was a anticipatory rally that started. And once the things really played out, you saw the big spurt and gap that we actually saw on Monday. But yes, the last 2 days are just associated with that. It will now be time to take one step back and try to look at the picture on a broader scale on how we are really supposed to go ahead from here for the weeks or months to come.
All right. So now we were just talking about how Nifty has outperformed, global equities in the last 1 month. And a lot of these factors have turned positive for not just us, but emerging markets on the whole. Do you expect India's outperformance to continue in the next, medium to short term?
So I do think India remains an outperforming market, but we do go both ways. I mean, if there is a significant issue in global markets, any kind of reaction for some particular reason, for example, the most anticipated US recession actually becomes a reality, then our market does tend to fall also more than other markets, as has historically been seen in that environment, which is what you really have to always be aware of when we consider global risks, at any point of time. But yes, right now, those risks have abated and you're actually seeing us outperform on the upside.
And is that outperformance likely to continue? I think just building on to what Suyash was asking, given that global risks sort of have been put a pause to for now, all indicators looking very positive. The idea of a recession in the US has somehow been paused with your favorable sort of data coming in. So given what is playing out globally, as well as the macroeconomic indicators of a higher GDP, faster consumption, continuity in policy perhaps owing to BJP's thumping victory in the 3 states out of the 5 that went to poll, perhaps a reflection of what could happen in the year to come as far as general elections is concerned. What's your medium to long-term view on the markets?
No, I won't jump to a very big conclusion on this because, even if you consider global risks, there is a slowdown in parts of the US economy, which we can actually see in the data. It's just that the markets have done much better. So the markets are actually moving on what we call as sentiment. Sentiment meaning the positioning of people in the market. So if most people were actually pessimistic of what is going to happen in equities, we actually had a lot of short position built up, specifically say in India. If you just look at the data at the start of November when we were at 18,850, then you actually had FIs built up almost the second highest short position on record at 176,000 contracts net. So when you look at that kind of short position, we were anticipating a short covering. The only thing is we halted at 19,850 for a while. I thought maybe we won't go past that. But the funny thing is that the shorts were actually not getting covered even at the end of November, and a lot of the cutting has actually happened post expiration in the early part of December, which means in the anticipation of this particular news item around the elections. I think that has caused a lot of the cutting. But even then, at the end of yesterday, which was the big day, you still have a day where shorts were at minus 25,000 contracts, so significantly down, but still short, still not gone back to the long side. And on the other side, even the client and pro positionings were ending up at the short. So if you actually add it all up together, you're looking at 35 to 40,000 contracts short overall across participants, which is still the higher end of the range in terms of having an overall short build up. So that is, I think, still allows you for a case that this market can extend higher because we've really not completed the process of getting those shorts out of the way.
Now, so you were talking about global risk and how some of the data coming out from US is softer than expected. But with inflation being their biggest problem, it looks like bad news, which in this case a softer data, is actually a good news, because then it leaves a door open for a rate cut in the next few policy meets. Wouldn't you say so?
Which is looking likely on the basis of the commentary that is coming in, perhaps in the first quarter of the financial year, US financial year, which starts January. On the back of that, what are the risks associated with inflation as well as recession? You said that there are risks of recession in certain parts.
Yeah, so it's let's not just take it as a given because some of the inflation data came favorable. There are issues with the most recent reading itself. But having said that, let's just look at what is causing growth, right? So you have one side, you have weakening inflation, which would actually be reflective of, well, that means that the overheated economy is actually cooling off. But on the other side, you have a 4.2% GDP growth print. So why is this deviation really happening? And the reason is that on the one side, you have a Fed which is trying to tighten by quantitative tightening and by raising interest rates. And on the other side, you have a rising government spend over the last 2-3 quarters, and that spending is essentially the one that is keeping the economy boosted and the markets afloat. So that is the risk of overheating. That's really coming from government spending, which is why you can't really write off the idea that inflation can have some kind of tailwinds and can show some kind of a bump up at some point of time. Are we really done with it? So unless we really see it clear out, we won't be able to say that it's really done. There's an experience that you have from the 1970s where inflation actually dropped a lot. The Fed got comfortable. They actually cut rates, and then it rebounded very sharply all the way up, and then they had to chase it all over again. So that is the risk that we face in a situation where government is spending relentlessly to keep growth going at the same time that the Fed is tightening, and then you wonder which one is really going to give in this situation. And so everybody's taking a bet based on just what the market is doing, right? If the market goes up, you start believing that the Fed is winning the inflation fight, and if the market goes down, you probably feel that they tighten too much. But since you have these two contradictory forces, we really don't know how it's going to end.
So just to clarify, you do not expect the sharp aggressive cut that the market is factoring in of about 75 basis to 100 basis points over the course of next 6 to 7 months?
Yeah, I will not take it as a given. I will say let us actually see it start happening. Unless the Fed actually signals that they are going to cut rates or that we are done and this is over, I will not buy it. And right now, they are not saying anything of that nature. If you look at their commentary from meeting to meeting, they're still saying that we need to keep it higher for longer and need to keep an additional rate hike on the table. For all you know, they will probably repeat the same thing at their meeting next week. And you need to watch out for that, because we would end up over expecting things without the data really helping us.
Okay.
And also the FII flows have once again picked up. They are back to Indian markets and back in a big way. They have bought in equities worth about 3,000 crores in the last 2 sessions. And China, Moody's has downgraded China's outlook from stable to negative. Given that this downgrade, do you expect the flows that were going to China that were expected to go to China because of this risk on sentiment, some of it to come to India?
So that's something we've tried to anticipate for all of 2023, and it's really not happened. Because if that was true, a lot of flows should have already come away from China to India. China has been slowing down for quite a while, and India has been outperforming in terms of growth, not just on GDP, but actual earnings numbers. But it has still not attracted, funds despite that happening. So I'm sure that the reasons are slightly different. Also, a lot of global asset allocation happens on things like simply using something like an MSCI emerging market fund or some allocation that they're making. People don't always specifically do an India allocation. They do an emerging markets allocation, and some of the money ends up coming here. At the most, what you end up getting is, okay, somebody reduces the weightage for China or some other places and increases the weightage towards India. And to that extent, yes, we should get incremental, flows. But for some reason, India hasn't really been receiving the kind of flows that we should have given our growth and outperformance.
And sir, the reading on India VIX, now India VIX has crossed the 13.4 mark for the very first time since May of this year. Is that a concern? Do you expect volatility to pick up, especially the kind of movement we have seen in the markets in the last 2 days?
Yeah, that's interesting, because I would have thought that the VIX initially it was going up ahead of this election announcement. And so the rise in the VIX was being seen as just pricing in risk from what will be announced. Now that the news flow is already behind us and the VIX is rising, it tells us that the market is trying to price in some risk at heightened levels. And one of the risks that I can actually, highlight, which is actually there, is the currency itself. Not many people really talking about it, but the USD INR is very, very close to an all-time high closing. I think it is close. It has made a new all-time high closing just 2 days ago, and it's hovering around those levels. Even intraday today, it surpassed the last 10 days range. So we do have a situation where our currency is particularly weak for some unknown reason. But I mean, we shouldn't say completely unknown, because we already discussed flows, right? FII flows have come in, I mean, have been pretty back and forth. They come for some time and then they are net outflow for all of 2023. And so that means if you're not attracting enough funds into the country, how do we really finance the trade deficit, right? So that issue is really kept on knocking at the doors for the currency pair. And that's a risk that I think markets probably will have to think about.
Okay, and sticking on to India, I want to come to sectors specifically. IT sector, which saw some of uptick in yesterday's trading session, saw selling off today. Now there is a report by ICRA that's out today suggesting that FY25 for IT sector is going to be better as compared to FY24, perhaps a growth in revenue to an upward of 6%. What are the prospects of IT sector in the short to medium term, Rohit?
Well, we haven't seen the kind of pickup in momentum for the IT sector as we would have liked, even after the US tech sector really taking off. So that's really unfortunate. And that then becomes the basis for us thinking about, whether should we really increase our weightage towards tech in India. And so I think the IT sector remains an underweight sector where, you really not want to allocate too much. We hope sometimes that it will now start participating, but like we are witnessing again and again, it fails on that front. And for that reason, probably will continue to not attract that kind of attention.
And so what are you making of this rally that we are seeing playing out in the banking and the financial space
sector, yes.
After being dormant for the longest of time, underperforming the market and being a drag on the market on the whole? That index is finally performing, and it is now also at a record high, scaling 47,000. Is 50,000 something that we can see in the next few months?
So I'm looking at 47,750 as the hurdle. I'm not sure whether we will get past that immediately or not, because what we've seen in the last 2 days is the catch-up phase, which is that, first you had mid-caps and small-caps hit all-time highs. The Nifty was also lagging behind. Then the Nifty made it to all-time highs, and Bank Nifty was the last one to really cover up for that. And it's done that probably in just 3 days' time. So that's a pretty fast cover-up to do. And which is why what we'll really try to judge over here is whether this was just a catch-up trade or whether there are more legs to it. And that's going to take a couple of days. We really want to see the market consolidate at these levels and head higher. That would be a sign that the current move itself has legs and is not going to correct before it goes higher. Otherwise, we'll have to keep the chances of it correcting from where we are, on the table as well. So we'll keep both options open. We're not really concluding as to whether this is a runaway move or it's going to be a reversal till we actually see that consolidation.
All right. Well, one thing we can agree on, bulls are having a great party as far as the Dalal Street is concerned. Rohit Srivastava, thank you very much, sir, for taking time out for joining us here on the show. And while we are at it, Suyash, let's also quickly take a look at some of the stocks that we are tracking. Adani group of stocks, for some reason, their rally also continues. I think we know the reason. I think we know what's happening here. A lot of factors, news factors that are playing up, but Adani group stocks, Enterprises up by about 17% today.
Yes, Shweta, tremendous rally that we have seen play out, not just in the last couple of days, but since January 24th. Let's just look at the numbers. For today, first, Adani Enterprises, as you pointed out, was up almost 17%, ended near the day's high. Other group stocks rallied as much as 20%. Adani Green was a top gainer. That stock has rallied by about 20%. It was locked in the upper circuit today. And collectively, altogether, the 10 listed, market cap of all the 10 listed companies, it has now scaled to 14 lakh crore. Now, we have not seen this market cap, this sort of level since January 27, just 3 days after the report came out. I was also looking at some of the returns that these stocks have given, since since November 24th, when Supreme Court reserved its decision on the report. And some of these stocks have rallied by as much as 40% in a matter of 6 or 7 sessions. And Adani Power is clearly, Adani Green is actually leading the way with a rally of about 45% or so. Adani Enterprises, Shweta, is up 36%. The flagship company, Adani Ports, which by the way hit a 1-year high in today's trade, has also rallied by about 28% or so. Double-digit returns we have seen across the board for Adani. And it looks like you give investors a finger and they'll take the whole hand, because we don't really have too many big reasons for this kind of rally that we are seeing play out in these stocks. Because
such an interesting Hindi analogy turned into English. But let's also quickly track the progress of Adani Group of stocks. Where exactly did it happen? So last week of November, out of the ordinary for Adani Group, and since then markets and Adani Group of stocks have been on rallies specifically. Then came the massive development today that International Development Finance Corp will go ahead with financing Adani Group. That is because they find Hindenburg allegations to be irrelevant. And in the midst of it was the election, the thumping majority for the BJP in the 3 states out of the 5 states that went for election. All in all, Adani Group of stocks continue to perform and outperform their peers.
But then if you look at the word that they use, it's irrelevant. They did not say the report was false. They said that it was not applicable for the process of giving out loans or applicable for Adani Ports. So I think that is something that really needs to be pointed out here. We are still at a stalemate as far as Adani and Hindenburg, the saga continues. We do not have a clear decision, not from Supreme Court, not from any US agency. The word is irrelevant.
Irrelevant, and we will discuss that story. Hello and welcome back. You're watching Business Plus. I'm Shweta Kothari. With me is my colleague Krishna Kumar. And we begin with our top story. How far can a company go in violation of the law of the land? Challenge the Supreme Court while at the cost of being held in contempt. Dare to publish false advertisements despite the promise to not do so. Yoga Guru Baba Ramdev's Patanjali group is doing all of it. Patanjali published a full-page advertisement where it has gone on to claim that it can cure diseases that cannot be cured, such as cough, cold, arthritis, BP, among others. I have that newspaper advertisement right here on the screens for you. It's a half-page advertisement published in the Hindu. Now, further today, it published another ad where it says that Ayurveda can completely cure and has solutions to all brain-related disorders from Alzheimer's to so far as autism. Now, the advertisement cites personal anecdotes and presents it as hard evidence. The advertisement display Patanjali's products and make stall claims that can easily fool the audience, give them hope and false hope and make them believe that their diseases can be cured, when in reality there is no scientific data to back these claims. The apex court in India warned Patanjali that if they kept publishing misleading ads, that they would be penalized and will have to pay a penalty to the extent of 1 crore rupees on every such product sold. In fact, Patanjali's lawyers on 21st of November told the Supreme Court that the company will not publish any misleading statement or make any casual statement